Good morning, I'm Gemma Bruce, Client Portfolio Manager on npower's Optimisation Desk. Welcome to today's market update on Thursday the 14th of July. So to summarise this morning, gas markets have opened a touch firmer than last night's close, while activity on the power market has been slow to get going, as has been the recent trend, although it does look set to follow the gas and open a touch firmer than the close. And this comes despite reasonably comfortable fundamentals and also a slight softening in oil prices this week. So if you have any questions, please do contact us on the displayed email address, or for more detailed information, continue to watch. So the gas system has opened in length this morning, with the line pack currently forecast to close just over 11 mcm long, and this comes despite strong exports to the continent via the RUK pipeline of over 40 mcm this morning. As the injection outage at Rough continues, the excess gas in the system needs to be mopped up, and this is why we've seen those higher exports to Belgium. LNG send-out also continues to be stable, with Southwark currently flowing at around 35 mcm following the arrival of a cargo at the terminal yesterday, which takes the total to 4 tankers so far this month, with a further 3 scheduled to arrive in the UK before the middle of next week, and therefore we should see LNG send-out continue at the recent level to make room for those new inventories. The power margin is reasonably comfortable today, the peak forecast at 13.8 gigs, which is due later this afternoon in period 44. And this comes despite very low wind generation, which is currently contributing just 800 megs to the system, and forecasts do indicate that we won't see levels pick up much above 1 gig for the rest of today and most of tomorrow before wind generation ramps up significantly to over 4 gigs late Friday afternoon and into the weekend. The French interconnector is importing at half capacity to the UK this morning, as has been the trend lately, while the Dutch interconnector is in full import mode. Elsewhere, we have seen oil prices rebound slightly yesterday afternoon following the sell-off the session before, and investors are weighing the outcome of the latest US inventory data, which showed crude stockpiles decline for the 8th consecutive week, which is the longest losing streak since June last year. However, we did see gasoline inventories rise further above their 5-year average, which is leading to the front month currently trading at $46.77 per barrel. The pound has advanced slightly this week ahead of the Bank of England's first rate decision since the UK voted to leave the EU at the end of June. Currency investors see a rate cut today as a sure thing, with 81% expecting the Bank of England to make the cut, compared to 11% before the referendum. Despite the recent gains, however, the pound still remains 11% lower than the US dollar compared to where it was before the UK opted for the Brexit. So that completes my market update for today. If you have any questions, do get in touch. I hope you have a great day, and we'll see you at the same time again tomorrow.